And joining us now with more on what is behind the recent drop in oil prices is Carl Larry, an analyst at Atlas Commodities. Carl, thanks for joining us again.
Thank you for having me back.
So Carl, very briefly, why are we seeing a slide in oil prices?
Well, right now, we just saw you were just speaking about the equity markets are doing really well. And I think what we're seeing is risk reduction. A lot of these pension funds, index funds are pulling money out of commodities and putting them back in equities.
So it's not so much the end users that are using less oil, but it's the speculators that are choosing to put their money in equities rather than behind oil futures.
That's right. And it's kind of funny because people will notice when oil prices go up and blame speculators. But right now we're seeing the speculators pushing the oil back down.
Those same speculators that had oil up nearly at $150 a barrel in 2008, so we can thank them. But there are other issues at play here, aren't there? I mean, the Chinese are investing heavily in renewable energy and alternative energy. How much of an issue is that?
Well, I think we're always looking at oil independence. Right now in the U.S., we're seeing a lot more oil independence, especially with shale oil. And I think the Chinese are looking at the same thing. They're looking at different ways to keep their country growing without having to rely so much on high-priced oil.
What about the macroeconomic element of economic growth? Is the fact that we're seeing a slowdown, even though slight pickup in the U.S. economy, which is debatable, but overall an economic slowdown, is that a significant factor?
I believe so. I think it's really interesting when you say that because a few years ago, just when we had this recession, Bill Gross called it the new normal. Well, I think we're seeing the new normal in oil right now too. Demand has not been as high as it's been in the past few years, and I think this is what we're getting used to.
The U.S. also mentioning that it's got a lot more reserves than initially thought. Is that having an impact? What does OPEC have to say about all this?
Well, OPEC's going to be, it's going to be tight for them, especially when we see there's not so much demand from the U.S. and there's not so much demand from China right now either. So it's going to be tough for them going forward.
Now, we do have some geopolitical risks when it comes to oil, especially with the Middle East. We still have tensions with Iran. And now we have the new tension threat from North Korea. How is this weighing in on things?
You know, this is the funny thing. Like I said, it's a new normal. Every year there's some kind of a new thing that happens, whether it's the Arab Spring or whether it's a recession or now North Korea. So we're adjusting to it. And I think if we see prices bounce around, it's going to be because of North Korea.
So this is already priced into the markets, at least from the Iranian point of view. Mahmoud Ahmadinejad still saber rattling as usual, but the markets have already counted that in. But now we have new threats from Pyongyang.
Right.
Why are we not seeing an increase in this?
Well, I think this thing that's going on in North Korea is very sudden and it's very shocking. It's not a slow progression of saber rattling or even something like Iraq or Iran slowly moving to another country. This is very quick and very definite. So it's not many people are sure on how to handle it right now.
But usually with fear comes a spike in prices. So what's keeping oil down? Is it really just the speculators thinking we're going to get more bang for our buck in equities?
I think that's what it is right now. I mean, we're still near $100. $93 is pretty high. I think we have a lot of upside left to this market. And once we see something really drastic happen in this market, it's going to shoot right back up.
Now let's focus on another commodity, gold. Surprisingly not moving up with all this talk of stimulus from all the central banks. Usually it's a hedge against inflation, and when central banks pump more money into the economies, gold goes up. What's going on?
Again, I think it's this risk reduction right now. I think many speculators are saying we're seeing a better return in the equity markets, whether it's the U.S. or Asian equity markets. There's a better return there. So they're pulling money out of commodities, oil, gold, even grains.
So is this a good time to get into gold, for example? It's roughly at still under the 1,600 level. Is this a good time to maybe get into gold? Do you still see a bullish overall future for gold?
I think right now we can't stop in front of a moving train, as we call it. Right now the prices keep dropping and dropping, but I think there's bargains out there. I just don't think that right now is the time to go all in, but it's time to start working that way in right now.
Well, what about the prospects of shale gas then?
Well, the prospects of shale gas are really interesting because we've seen so much shale gas and so much shale oil in the U.S. I think that if it expands into other countries, for instance, China or Russia or even Europe, that's going to really change the landscape of countries like OPEC.
Is the environmental concern of fracking something that's keeping shale gas at bay?
I think it is for some countries. I think the U.S. is going full force. I think China is looking at it very hard, and I think there's, right now nothing proven, but a very good opportunity to increase oil reserves.
Okay, thanks again for joining us very much.
Thank you.
Carl Larry, analyst for Atlas Commodities.